Hey guys, welcome to another 9 to 5 dividend investing video. I am Mike, and in today's video, we're going to be talking about the PE ratio. You can watch any YouTube channel, you turn on CNBC, you turn on MSNBC, and all they're talking about is the PE ratio, the forward PE ratio, the trailing PE ratio. What is the PE ratio? We're going to find out today. But with that said, disclaimer, I am not a licensed professional. If you need help investing in the stock market, please seek a licensed professional. So let's get investing. What is price to earnings ratio or PE ratio? The price to earnings ratio, PE ratio, is the ratio for valuing a company that measures its current share price relative to its per share earnings, or EPS. So before we go any further, you guys can read this on your own. We're going to go into how we get a PE ratio. So let's look at the equation. So in order to get the PE ratio, we have to take the current market value per share and divide that by the earnings per share. So that will then equal the PE ratio. This is the golden equation, guys. This is the one equation that everybody should know how to do. Market value per share divided by earnings per share, PE ratio. So now, guys, we understand what the PE ratio is and how we get the PE ratio. We showed you the formula. So now, a couple of things I want to go over about the PE ratio before we talk about the forward and the trailing. If the forward PE ratio is lower than the trailing, analysts are expecting an earnings to increase. So again, if the forward is lower than the trailing, analysts expect earnings to increase. Now, the higher PE equals expected growth in the future. So if you see companies with PE ratios that have 100 PE, that means analysts expect these companies to grow, extremely grow in the future. So one other thing, companies that are losing money do not have a PE ratio. So one more thing, companies that are losing money do not have a PE ratio. Yes, you could find a negative PE ratio, but that's as good as not having a PE ratio, because all you're doing is waiting for that company to get profitable. So let's get into the forward earnings per share and how we get that. The forward or leading PE ratio uses future earnings guidance rather than trailing figures. We'll get into trailing in a second, sometimes called estimated price to earnings. This forward-looking indicator is useful for comparing current earnings to future earnings and helps provide a clearer picture of what earnings will look like without changes and other accounting adjustments. So one thing I'd like to touch on with the forward PE ratio is it's a prediction. It looks at future earnings guidance that a company during their quarterly results, what they'll predict their future numbers will be. So you could take their future numbers and divide it by their market value per share, and you'll get their future earnings guidance, or forward PE. So trailing price to earnings, the trailing PE relies on past performance by dividing the current share price by the total earnings per share over the past 12 months. It's the most popular form of PE metric because it's the most objective, assuming the company reported accurate earnings. Some investors prefer to look at trailing PE because they don't trust other individuals, analysts, earnings estimates, but the trailing PE also has its share of shortcomings. Namely, a company's past performance does not signal future behavior. So the trailing PE, most popular, yes. We divide that by the current share price against the total earnings per share over the past 12 months. You get the trailing PE. It is the most popular and probably most looked at. But again, like I said, you cannot predict what a company is going to do in the future, and you cannot predict what is going to happen. That's why it is always dangerous, and you may lose all your money, but that's okay as long as you're invested in good companies, good quality companies like I like to do, especially, in my opinion, ones that pay dividends, but that's for another video. And again, trailing PE, most popular, current share price divided by total earnings per share over the past 12 months. So let's look at some PEs right now. So here we go, guys. Apple PE ratio, historical data. Now we could look at June 30th, 2019, right here. The stock price on that date was $197.92. The trailing 12-month net earnings per share was $11.73. So we take the current stock price, divide that by the trailing 12-month net earnings per share. We get a PE ratio of 16.87. Self-explanatory, guys. So let's look at a couple more PE ratios. Apple stock closed today. That's Tuesday, September 24th at 217.68. After hours up a little bit to 218.30. So we're going to look at the trailing PE, the forward PE. The forward PE was 17.10. Trailing PE was 18.48. Again, forward PE is lower than the trailing PE. Analysts expect earnings to increase in the future. I do too. That's why I'm an Apple shareholder. Apple is profitable due to the fact that it has a PE ratio. Companies that are losing money don't have. So, I mean, take what you will with a grain of salt. Apple's PE ratio is moderate. Don't expect too much growth in the future. Moderate growth. Probably more growth than a lot of other companies, but still. Doesn't have a 100 PE ratio. The PE ratio is not astronomical. It's not a super volatile stock. And Apple's going to be around for a very long time. So we discussed the forward PE ratio, the trailing PE ratio, the PE ratio, how we get it, the formula that we use to get the PE ratio. We talked about some things about the PE ratio again that I would like to go over quick. If the forward is lower than the trailing, analysts are expecting earnings to increase. Good thing, earnings increase. Higher PE equals expected growth in the future. Companies that are losing money do not have a PE ratio or a negative PE ratio they may have. Again, PE ratio equals market value per share divided by earnings per share. That's how we get the PE ratio. Guys, like, comment, subscribe. Always love the comments. Love responding to them. Give me a like down, of course, please. Helps me out. Watch the video into its entirety. Please, if you learned something, again, comment, subscribe. Again, I am not a licensed professional. If you need help investing in the stock market, please seek a licensed professional. So guys, always remember, dividend invest.